Hello guys, Franco here. And in this video, I want to break down the trades for the morning. One loser, one break even, and one missed trade. So let's jump right into it. Alright, I'm gonna start just showing, this is a 500 volume bar that I use, right? And in the morning, after the market open, I see the rally and I start noticing how the ADD and the internals were going aggressively to the long side, right? So I tell myself, all right, how can I jump into this trend, right? So I chose this one, this zone right here that I'm marking off, right? So my plan is just wait for the retracement, right? Wait for the retracement to trade this thing long, right? And here is what I made a mistake. I've repeated, a lot in this channel how important is the invalidation point, right? What is the invalidation point? Validation point is the point where the trade is not valid anymore. That means, all right, if it reached to this point, the trade is not valid anymore, so I cannot take it long, right? My invalidation point right here is here, right? Right. So I decide to break this area accordingly to my risk parameters, right? And for all you that have watched me trading, in the account that I have right now, the size account that I'm using, it needs to be around $300, right? More or less 10%. And I have a max risk per day of $1,000, and per trade I usually do 1/3, right? But my mistake here is that I chose the area, which was a good area, right? But I chose the proximal line, which is this first line. The price is coming in this direction, right? Let me mark this up, right? The price is coming here, so I'm gonna trade this thing long, right? And when it comes here, I say, all right, this was not a limit order because I wanted to go deep in the zone because my risk is too narrow, my risk is too small, right? So I decided, okay, I'm gonna pass for this, and if it goes back down to this line, right? It touches this candle here, and then I'm gonna put my order here in the black line, right? So my intention was, all right, this is my plan. Come back down, and it goes back up to my target, right? With the caveat that it did this. It went down, it certainly went up, but it went down again. Then the zone held, and it went to the target, right? My target is the blue line, and my stop is here, where all you can show it, we can see it, like it's 12, 3, 21, 50. So these arrows mark my trade, where I keep here I entered, and here I was stopped out, right? Well, that's fine. So we all make mistakes. So the thing is, what I can learn off of this trade, right? And something that I already have in my tools, which is the invalidation point. That was my comment at the beginning. The invalidation point is something that is non-negotiable, and I did give up the invalidation point. So the point for the future is, all right, my invalidation point is right here, so I should be taking this thing right here, right? And my target can be even closer, right? Or even if I want to do this, my risk-reward ratio will be greater, right? So next time, validation point, don't negotiate it, okay? Next, my second trade, and that cost me -1 hour, by the way. And that is so far is 12:55 when I'm recording this video is -1, right? Next trade. My second trade is a break even. Very frustrating trade, but like I've said in the past, it is what it is. I made mistakes, and you have to learn how to live with it, right? So my second trade is this area, right? I see the tick and the ADD changing to the downside, and I say, all right, how can I join into this trend, right? And I marked up this area. Right here, I did trade at limit because I saw a lot of signs of weakness in the market, so I decided to trade at limit, right? All right, so in this trade, I did put the invalidation point correctly, right? So I wanted to risk around $300, and my risk around $300 was from here, right, to around here, right? And my target was this red line, right? So I do reach here more than 2 to 1. This is 2 to 1, and I'm gonna show you guys what a 3 to 1. I went to a 3 to 1 trade here. My target was 5.4, around that area, and then it came. I see a lot of weakness in the internals, so it went down, came up here. Sorry. So it went down to this point, then it went down, it went up here, and then it didn't want to break this point, and then it stopped me at break even, right? That's fine. I can live with the break evens. What I cannot live is being +3 R, and then being break even. So I'm trying to plan around this. I'm gonna tweak a little bit of my plan. I don't want to change too many things because my plan is very good. It hasn't been very profitable the last 2 weeks, but that's the way it works. Like trading is unpredictable. I can have 5 straight green days with 3-4 hours per day, and I can have days like this latest. So yeah, I ended up breaking even in this trade, and let's go for the next one. And I want to show you guys a missed trade, right? This trade I had it since it created the zone, right? That's why my target on the first trade was around this area. I didn't pretend that the price could go through this area easily, right? So I started to see some weakness when price came here, right? It paid. This area went something like around 3 to 1, then came back with a lot of weakness, and then see you later. It came back down, and I had this demand here that was not filled. I had an order there, never got filled, and it retraced back, and then we finally broke that area. So the lesson today is number one, you have to accept what the market does, because we have no power or control over it, and the only thing we can control is our attitude towards the market. If you get a revenge trade or over trading or oversizing because you want to get back whatever money that you lost, that is when it really going to hurt you. And it's not only going to hurt your brokerage account, it's gonna hurt your mental account, which is the most important to preserve. Your mental account is your main account. That's the one that you have to take care of. Okay, so I'm gonna wrap up this video, and I see you guys all tomorrow. Okay, thank you.